Hello, I'm Ashley Albertson, your Client Service Manager here at Tull Financial Group, and joining me today is Robin Tull, CEO and founder of Tull Financial Group with more than 35 years of experience in the industry. And with that time, you've seen a lot.
Yes, very much so.
And so today we want to address some of those things that has happened over time and the concerns that our clients have had. And so the first one that I wanted to address is investors. How should they differentiate between the information that they're seeing on the news and what's valuable and then just the noise?
There's a lot of information out there. We're dealing with this 24-hour news cycle where you flip the news on, flip the TV on anytime, a lot of information. This happened here or this happened here. Some of it's good, some's informative, and some is not. But what you need to remember is they're still journalists, they're still news anchors that need to get our attention. That in advertisement terms, they say the word eyeballs. So that's what they're trying to do, and you've got to be aware of that, I think. Then there's your phone, right? Where you set your notifications if the market's up or the market's down or whatever your portfolio might be doing. I think, and then the more you look at it, these algorithms, they cause you to, they feed you the same more information, which causes a lot of emotional concern. And I think that's the thing that people are dealing with a lot today.
Yeah. So what are these common emotions, and how do you recommend people managing them?
Yeah, I think the most common that we run into is fear and greed. When you think of, if you can control fear and greed, you're going to be a successful investor over time. Fear would be, the market drops and you pull out too early. That would be something that you have to be watching out for from an emotional reaction. And then the other is greed. Greed is saying the market's up 24%, 25%. I need to get in there. That's the FOMO, fear of missing out. Try to help people not do that. I often will use a baseball term, right? Swinging for the fence. And those in baseball that swing for the fence strike out a lot, and their batting averages are pretty low. We want to help people hit singles and doubles, get them around the bases so they have a successful retirement.
Yeah, I've heard that one before.
Yes.
So personal experiences, what would you say were some emotional decisions that directly impacted investment conditions? Yeah,
I think the things that I look back in history, and I've been here around a little while, one would be in 1987, right? I've been doing this for 40 years in July, Ashley. So 1987, October 19th, that was a Monday, and the market dropped 23% in one day. Caused a lot of people concern, and they were bailing out, and they really shouldn't have, because things really corrected very quickly. You think of 1999 to 2000. That was when everybody said that when the computers turn over to 2000, economy's going to fall, market's going to fall. Didn't happen.
I remember that.
It was a lot of fear. And then, in the 2000s, we had the dot-com bubble burst. We had the mortgage crisis in 2007, 2008. And then what was most recently?
The pandemic.
The pandemic. And it was pretty short from a market standpoint. So all of those things cause people to react and be emotional, and it really does affect the successfulness of their investing program.
It does, and I've sat in with you in a lot of meetings with our clients, and I can see and feel the concerns that they're having, political or otherwise, and worry about their financial future.
Yeah, politics is some people will invest based on their politics.
Right.
And we saw that in 2020 when people pulled back and the market went up. We're seeing it today. And the best thing is not to invest based on your political affiliation. Find out what's going on in the market. Look at the data points. Look at the policies that are being set up. And allocate your portfolio based on the real data, inflation and interest rates, not on who's in power.
Yeah, and that's what you do. That's what we do here at Tull.
That's what we do.
Yeah, so what are some practical steps that an investor can take to avoid?
Yeah, I think the first thing, whether they work with us or work with someone else, choose a financial advisor to work with. There was a Dalbar study that said that working with an advisor, I think it's 4.66% of performance was lost because of emotional decisions. That can hurt, and I think working with a financial advisor can help.
Yeah, absolutely. And then wasn't there a Vanguard white paper that came out?
There's a really good Vanguard paper that talked about advisor alpha and what an advisor can add to the success of a client's financial planning. financial plan.
Yeah.
I think it was like 3% they added
incredible,
to
yeah.
that, of that, to add to the success of their investment performance through
Yeah.
that. What were some of the things that the advisor did? Financial planning, tax planning, basically being disciplined, and this other thing we're talking about is being a behavioral coach of helping them through events that might occur.
Very beneficial. And actually, we will share that link with you all in the description below. I think it would be a great read. Yeah. So in summary, Robin, give the average person or even myself 3 takeaways, steps that we could take.
I think the first thing, Ashley, is having an investment policy. We set an investment policy with every client we work with. How much are they going to have in stocks? How much are they going to have in bonds? What's their comfort level? What's their risk level? I often say sleep level. Do that first, and then whatever the event happens, then you've already set that in advance. I think the second thing is if you are retired and you're receiving income from your investments, set aside 12, maybe even 18 months of cash in a money market account. And it'll be like a paycheck. It'll pay you every month. And no matter what happened, whatever's going on in the news or your phone, you know, hey, I've got that money coming in. I've set that aside in advance, and so I don't have to worry about it. And thirdly, let's do us both. Let's turn off our phones. Limit the amount of news that we watch.
Yeah, I think that one will be the hardest one.
It's true.
Yeah. So in summary, we are always here to talk to you about your concerns. You know, pick up the phone and give us a call. Any of the advisors here would love to discuss it with you. As always, we appreciate your trust, and thank you, Robin.
Thank you, Ashley.
Yeah.
Great.